Hi, I'm Peter Rose, founder of Longwood Currency Trading. Is trading Forex really that simple? You hear me say variations of that all the time on the, 570 some odd videos that I've published to date. This is 2026, by the way, January. As you can see in the background, it's a beautiful January day. Snow on the ground, snowed night before last and a little bit during the day, so we picked up another few inches. Now the sun is out and it'll be a pretty day. Sue is out walking the bow dog through the woods. So I wasn't going to do a video today, but I kept thinking about communication that I had from someone who emailed me. Thank you very much for your time that it takes you to email me. There, I guess not question, but well, let's call it a question. It was exactly that. Is Forex trading really that simple? And the answer to that is yes. Now, the reasoning behind that yes is complex. Let me take you through a trail of information. Try to stay with me. I try not to make the video too long, but I think this is important because simple is not the same thing as easy. And I think for most folks, the concepts of complexity and difficulty are synonymous. And so bear with me here as I try to respond to is Forex trading really that simple? It is that simple, but it's not that easy. As my background, if you are new to the channel, thank you for watching. I hope you stick with the video and watch many more of them. But my background, I have a bachelor's degree in physics, almost a minor in math. I was a software engineer doing complex web-based business applications for 33 years, investment real estate for 40 years. I've been involved in the martial arts for 57, 58 years now, and actively taught it for over 55 years anyway, actively over 50 years. That's my background. So I'm able to bring all that together, particularly the physics of it, and look at things and decompose them into their simple components. You can't solve big, complex things. In software engineering, we were solving big, complex things, but we did that by using a process, a methodology called the Software Development Lifecycle, the SDLC. And that was a complex process used to apply to solve really complex processes. And in looking at my original failure in losing $40,000 of a $45,000 account in about 4 months, when I first opened my account, and that was after 8 years of study and demo trading and all that other stuff, was surprising to me because I thought I had all the information and all the background, and I'd written computer programs that did simulation analysis and Monte Carlo and complex matrix, all that shit. And I lost $40,000. That's what my 8 years got me, is $40,000 loss. And I had been watching the videos like you guys do, and I trusted them to convey to me the reasonable, logical, and correct steps that someone would need to step through in order to get to where they were. And that wasn't the case, because as soon as I lost that money, I go, whoa, this is wrong. I'm going to step back from this. I took an objective look at it through the eyes of a software engineer, and in 15 minutes, I go, oh, this is totally wrong what I'm doing here. And so I came up, I wrote down on a piece of paper the 3 phases of the life cycle of a currency position, my RIP against the software development life cycle. This is the life cycle of a currency position, and it consists of entry analysis, position management, and exit methodology. Those are the 3 phases that a position goes through during its transition from entry to close. Each one of those phases represents one problem to solve. If there were 2 problems to solve, I would need 2 rules. But because I have 3 problems, I need 3 rules. If the problem was so complex that it needed 2 rules, I wouldn't use 2 rules. I would break the problem into 2 pieces and write a rule for each one of those pieces. That's what the software engineering development lifecycle teaches you as its primary tenet to successful solution of complex problems. So that's my background, and that's the world the way that it is. So let's look at the Forex market itself, because that's the game field that we're playing on, right, as retail traders. The Forex market is the most complex market in the world. It's the most complex game. And there's reasons for that, because you're not just looking at hitting a golf ball and figuring out the dynamics of where that ball trajectory is going to pan out. But you're looking at the economies of not one country, but 2 countries interacting with each other and itself in order to come to this massive clusterfuck of interest rate policy. And it's that mosh pit of information and activity and fundamentals and all that other kind of crap. Each one of those adds to the complexity. Each time you add a component to a problem, it magnifies the complexity far more than you could conceive of. And again, let me present to you the mathematics of permutations and combinations. You would think if I had 2 objects, A and B, just 2 things, that I would have 2 possible solution paths. I could use A or I could use B. But that's not the case. Because in having 2 objects, 2 conditions, 2 rules, 2 indicators, I really have 4 permutations, 4 choices. I can have choice to use just A, or I could use just B, or I can combine and do AB, putting more emphasis on the A than the B, or I could put the emphasis on the B and have BA. So I could have A, I could have B, I could have AB, I could have BA. I have 4 permutations to just 2 conditions. So if you're trading with 2 indicators, you have 4 different permutations that you can apply the weighting factor against those conditions, those indicators. If I had 5 indicators, I would have 325 different permutations to that. And so if you look at the complexity of the Forex market, where do you get a more complex market? Because you have 2 countries, each with housing starts, NFPs of some kind, interest rate policies, producer price indexing, unemployment, rolling employment. You know, there's 5 for one country. There's 325 different permutations. You put those in. Then I got another country here. So there's 325 different permutations. You put those 2 in. But I'm really looking at 10 economic indicators, NFP and housing starts, because the housing starts is different in country A than it would be in country B. And so I really have 2 housing start elements. So now I've come to 10 different things in a simple economic model of looking at the currency market in order to fart around with. So I don't know what the answer to the number of permutations is to 10, but to 5, it's 325. At 3 permutations, I think it's, again, I forget, I never bother to look it up because I don't give a shit. It's 19 or 21 different permutations for just 3. So for just 3 things, I've got, say, 20 different permutations I can go in. I'm talking about 10. So it goes from a combination of 3 things giving 20 to a combination of 5 things giving 325. I mean, it's a blow-off. It's an exponential clusterfuck is what it is. And that's what makes the market complex. And so what are you all trying to do? You're all trying to do fundamental analysis against the economic conditions of the 2 pair countries, and you're trying to do this and that, the other thing, and you have no hope of doing that. Even the economists when they're coming out with just the housing starts number. They can't really agree to it because you're dealing with information from thousands of different inputs. So this complexity is the result of its hugeness. And that means that you have to use different approaches to trading it. What I'm trying to say is that the more complex the problem is, the huger it becomes. You need to change the way that you view the solution set. You need to change the types of conditions that you're writing for your rules. So that's what I did when I lost all that money. I stepped back and I said, this is about as totally chaotic a market as you can get. I know how to solve markets like that. There is a solution set to that. And that's where the life cycle of a currency position comes from. Instead of trying to solve the currency market, all I got to do is solve entry analysis, position management, and an exit methodology. And each one of those rules each phase is a rule. Each one of those rules has between just 2 and 4 conditions, and they're sequential, so they don't get into this matrix permutation issue. If condition 1 is true, condition 2 is true, condition 3 is true, and condition 4 is false, you don't execute the rule. Condition 1 is true, condition 2 is false, you're done. You don't execute the rule. All conditions hit true, you get a binary response, which is act. It's either go or no go. That's what makes it simple. But the only way you recognize the simplicity is to understand how to resolve the chaos. You don't have to solve, as retail traders, we don't have to solve the chaotic problem. The institutional people may have to try to do that because they're dealing with the different purposes and they have clients that are putting orders into them and they're trying to balance all this stuff. You can't just do that on crazy math of it because you have to be present mentally to see what's going on to protect your client. But retail traders, the only person I got to protect is me. Yeah, how do I do that? I set a stop. Phew, that's it. So is trading Forex really that simple? Yeah. You got to understand the importance of the simplicity that rules should take on in order for your trading to be simple. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.